It's recording.
Okay. Sorry about that. All right. Well, welcome. We have some training today that's going to be provided by the Department of Child Services. So we've got some interesting information that they're going to be giving to you. So I just want to go over a few housekeeping items. Again, good morning. Welcome. We're kind of rounding up the end of January here. We did send out the February schedule of sessions that we're going to be doing in February. That will be the last month that we will be carrying on with the newly elected sessions. You'll roll over into your regular trainings at that point. Again, all these are being recorded and will be available on our website if you need to go back and want to review them or just, rewatch them just because you want to. So today's session is also being recorded. We'll try and get these up by the end of the week. Hopefully they're up there tomorrow. That's normally a pretty quick turnaround. At the very, very end, we will give you back control of your microphone and your camera so that you can ask any questions. If you have it, we'll do a Q&A session if we've got it, or if you just want to say hi to us and introduce yourself. Well, with that being said, I'm going to hand this over to John Mallers, and he is going to, introduce his others.
Okay, it's actually just me today.
It's just you.
It's just me, and I need to share my screen when you give me a second. There we go. That work?
Yes, it did.
All right. And I went forward, and I didn't want to. All right, there we go. I am John Mallers. I'm the Assistant Deputy Director of the Child Support Bureau, and I oversee the Financial Quality Assurance Unit of the Child Support Bureau. And what my unit is charged with doing or responsible for doing is monitoring and reviewing Title 4D funding in Indiana, and that's a federal grant covering child support enforcement. Now, you're going to hear Title 4D, that phrase, a lot in this presentation. What Title 4D refers to is Title 4D of the Social Security Act of 1975. And again, that deals with funding for child support enforcement. And that is handled at the county level by the county clerk, who deals with filing and ISETs, which is the child support statewide system. The prosecutor's office, they establish paternity, and they also build cases in the ISET software. And then Title 4D courts, if a county has a 4D court, they obviously hear the 4D cases as well. So those are the county agencies, that those 4D, the clerk, prosecutor, and the court, the county agencies that deal mostly with Title 4D expenditures. All right. But since you're the auditors, I did still want to give you a little bit of an overview of the Title 4D revenue streams that come into the county. You'll be dealing with those. You'll be trying to figure out where they go and how they can be spent to some degree. And so we're going to go over the 4 Title 4D revenue streams that you will see coming into the county. The monthly expense claims, which are monthly reimbursable expenses, indirect cost allocation plans, which are annual reimbursable expenses, Title 4D incentive funds, and then also these PCA funds, which stands for Private Collection Agency. And we'll go into each of those in a little bit of detail. Also, the auditors do have a couple forms that they fill out related to child support. One is the Quarterly Incentive Balance Report, or the QIB, and then there's also the Auditor's Health Insurance Form that we'll talk about as well. And lastly, I'm going to go over some remittance notices that you'll receive from us, and these are related, obviously, to the revenue streams that are coming in, and these notices will tell you where the money goes when you receive these electronic transfers into the county. And so it's useful to kind of go over those a little bit and be familiar with them, because they're very helpful in telling you where that what type of revenue it is and then where it goes. All right. So the first Title 4D revenue stream is what we call the monthly expense claims, or the monthly reimbursements. So county offices are eligible for a reimbursement of expenses that they incur enforcing child support orders. Again, that's the duties that they normally do throughout the normal course of their work. That's prosecutors, establishing paternity, building cases and ISETs, the clerks dealing with the casework and keeping track of the cases and the files, and the courts obviously hearing the cases. the normal work that they do, the wages that they incur, the supplies and whatnot, and the equipment that they use while they're directly doing that normal work is eligible. The expenses they incur is eligible for a 66% reimbursement from this federal grant. Now, on this monthly expense claim, these are direct expenditures, and by that we mean expenses that the county incurs or that the offices incur directly out of budgets that they control. So that would be their county general budget for wages and whatnot. The clerk's office, then maybe that's the clerk's perpetuation budget, or the prosecutor, maybe it's out of pretrial diversion. But these are budgets that they control and doing work that they normally do on a daily basis. The reimbursements that they determine then are based on documentation that they have to justify the amount that they claim. So, for example, if somebody, for wages, you've got timesheets. So the employees that do 4D work, they track their time between 4D work and non-4D work, and you get them a percentage. And then that percentage of that person's wages and fringe benefits is eligible for reimbursement, and that serves as documentation to justify the amount. The supplies and the other expenses, they also have different allocation methods for those. That's more what the clerk's office and the prosecutor's office deal with, but I was just kind of letting you know they have documentation to justify the amount that they claim for reimbursement. So they determine the eligible amounts. They input these amounts on our 4D expenditure portal, which is our electronic portal where they input the final information. That information comes to us. We review it a little bit, and we send it through the payment process, eventually goes to the Auditor of State, comes back to the county as reimbursements. Now, when those reimbursements come back to the county, they go back into the fund from which the expense was originally incurred. So if wages are paid out of county general, the reimbursable portion goes back into county general. If there was expense that was reimbursed out of clerk perpetuation fund, then that goes back into the clerk perpetuation fund as well. Now, the remittance notices, when we get into that, I'll show you, because that's information that when the clerk, prosecutor, and the court, or a vendor that they have prepares these monthly reimbursement forms, they're supposed to indicate on that form, hey, this portion of this expense is supposed to go into a different fund, because the default is county general. But we'll get into that when you see the remittance notices. Now, I did want to mention, again, that these forms are prepared generally monthly by the clerk, prosecutor, court themselves, or they hire a vendor that does this work for them. And to do this work, they need the actual official financial records of the county. This is a cost recovery grant. This is county money that they're incurring, that they're spending. They incur it for Title 4D, and then they subsequently claim a reimbursement. So it's cash basis. The expense has to be incurred first. To know when these expenses were actually paid by the county, we need to have the official ledgers and payroll reports from the county. It can't be something that's kind of made up or thrown into Excel or whatnot. If it needs to be under federal regs, it needs to be the official documents of the county. And so that would be payroll reports, and a ledger, depending on whether you're using Lao or using Harris or another system, it's the expenditure ledger that shows the expenditures for the clerk's budget or the prosecutor's budget, and the actual payroll reports as well. And they will be asking for these reports on a monthly basis, and I'm just respectfully asking you guys that they be made available. There's been some instances in the past where there was a little difficulty getting these forms from the auditor's office, and it's not widespread by any means, but we just respectfully ask that if they're requesting these documents for their Title 4D reimbursements, that you make them available, because it is required under federal regulations. All right, so that's the first revenue stream. It's county money that you incur directly doing the work of those offices, of those 40 offices, and they claim a reimbursement. The second revenue stream is also a cost recovery grant. It's also county money incurred and then subsequently claimed reimbursement. But instead of it being directly spent by those offices, these are called indirect costs. These are costs paid by other budgets that still benefit clerk, prosecutor, and the 4D court. A perfect example is utilities. Let's say the clerk, prosecutor, and the court are in the courthouse, and there's utilities obviously being paid because the power is on and whatnot. And so, but that expense is not paid out of their budget. It's paid out of the courthouse budget or the commissioner's budget. It still benefits the clerk, prosecutor, and the court. It's just not paid from their budget. And so it's still, even though it isn't paid from their budget, it's still an eligible cost for reimbursement for Title 4D because it's benefiting those offices. So it can't be claimed monthly on the MEC, but there's an additional plan. It's called the Indirect Cost Allocation Plan. Now, this is an annual plan. Every county has a vendor that prepares this on their behalf. This is not something that the auditors have to deal with, other than there's a little review of it that they have to do. But it is an annual plan. Like I said, every county has a vendor, and these vendors have a pretty sophisticated software that goes through and does a lot of these allocations. For example, the utilities expense. That's going to be allocated based on the square footage in the courthouse. And everyone's relative square footage, that determines how much of that utilities cost is allocated to them. Security costs. If security function is at the front door of the courthouse, then the cost of the security officers and the cost of the equipment can also be allocated to everybody in the building, just like the utilities. And that same goes for, IT expenses, HR expenses, liability insurance, building and equipment depreciation, and even the the accounts payable and the payroll function of the auditor. The accounts payable and the payroll, the bookkeeper and the payroll person, they pay payroll and claims for the clerk, the prosecutor, and the court. So a portion of their wages and fringes can be allocated as well in this software for this cost allocation plan. So anyway, all these expenses, all these different expenses, and all these different allocation methods are thrown into this plan, and at the bottom it generates an additional Title 4D reimbursement. And this reimbursement all goes into the county general fund, regardless of how it's been generated or from where it's generated. It entirely goes into county general. Remember, on the monthly expense claims, it went back into the fund from which the expense was incurred, but here it just goes all into county general. Now, this is not a plan that the county auditors need to complete on their own because, again, like I mentioned, there's a fairly sophisticated software out there, actually there's 3 or 4 vendors that do this. They each have their own software. No one's expecting you guys to do this. The plans are about 150 to 200 pages long, so no one's expecting the auditors to go through and verify every number on these. But it is the county's grant, and the county is ultimately responsible for the proper amount being claimed. And so it is important that the county auditors make themselves familiar with this plan. We have requested and required the vendors to have a little checklist that they go through with the auditor when this plan is complete. And they will go through the plan and show you, here is what we have for the head count for the county. Does that look reasonable? Here's what we have for the expenses in the clerk's department. Does that look reasonable? And so it's more of a high-level reasonableness review that you need to do, and then you can just check off and sign off or initial off on these sheets that the vendors have. So that's the kind of review that we're talking about. It is required to kind of go through it with the vendor and make sure that you're aware of it, but no one's asking you to redo or go through this 100-page plan. You've got your own work to do, and so that's something that we've tried to keep to a little bit smaller workload for you. So the first 2 revenue streams, again, county money that is expended and subsequently claimed for reimbursement. The third revenue stream are Title 4D incentive funds. Now, this is a separate federal revenue that is the Congress appropriates for the states. It's around $550 million that Congress appropriates every year. And what the states do is they compete with each other based on certain performance factors related to child support. And how the states do relative to each other on these performance factors determines how much money each state gets of this appropriation. Now, Indiana currently is ranked 7th in the state overall on these performance factors, which isn't too bad. And we pull in around $12 million a year in incentive funds. And just to give you some perspective, about 10 years ago, we were ranked 35th in the nation, and we only pulled in around $5.5 million. So that better performance does result in quite a bit of additional money. So once the state's amount is determined, that $12 million is determined, then the state has the counties compete in very much the same way. How the counties do relative to each other on those performance factors determines how much of that money that each county gets. Now, caseload also plays a part in it, and so the larger counties end up getting a little bit more money because they just have more work. But there still is the competition on those performance factors to determine how much each county gets. So then once the county portion is determined, then you see on the slide there the breakdown of where that money goes at the county level. There are 3 incentive funds at the county level. There's the prosecutor county incentive fund, it's Fund 8897, the clerk incentive fund, 8899, and there's a Title 4D incentive fund, which I'll go over a little bit, which is Fund 8895. The prosecutor's fund gets 33% of the county money, and then 22.2% goes each to the clerk fund, Title 4D incentive fund, and then CSB keeps 22.2% of it. We keep that at the state. Now, these amounts the county receives on a quarterly basis. So the first, and we try to distribute those very early in each quarter. So I believe we've already had the January distribution for the first quarter, and then it would be in March, June, and July, and then October. So we try to get it early on in the calendar quarter to get those distributions out. Now, those distributions are somewhat estimated because when we start those distributions in January, we don't know what the final number is from the feds. So we make 4 distributions throughout the year based on that estimated number, and then when we get the final number, there's oftentimes a 5th distribution, which is like a settle-up or a true-up payment. So there may end up being 5 distributions in the course of a year. But incentive funds come to the counties generally quarterly throughout the year. All right, so what are incentive funds and how can they be used? Title 4D incentive funds can only be spent on 4D related expenses or the 4D portion of an expense. So as to compare, you can pay the entire wage of somebody out of county general, obviously, but then you claim as a reimbursement the 4D portion. For incentive funds, you can only pay the 4D portion out of incentive funds. The rest is going to have to come from somewhere else. So it's only the 4D portion of the expense based on, some sort of documentation. Again, the timesheets if you're paying wages, or some other allocation method if you're paying supplies or something else. It's just the 4D portion of that expense. Incentive funds are not reimbursable. It's a separate federal drawdown to the counties and to the state. It's not reimbursable expense. Incentive funds are intended to supplement, not supplant, what your current spending is. So think of it, a better way to say it is intended to enhance what you're currently doing, not replace county funding. So over and above what you're already currently doing. Title 4D incentive funds generally do not require appropriation from the county council. As long as it's an eligible 4D expense and you've got the money in the fund, it generally does not require appropriation. Now, an exception to that is if you're trying to increase the salary of an elected official. If the elected prosecutor wants a bonus or a prosecutor supplement, or the clerk's trying to take a raise or something out of incentive funds, then that is going to require council approval and appropriation. Incentive funds can't go into the red, which I'm guessing is pretty consistent with any fund at the county level. But even if you know one of these quarterly distributions is coming, you have to wait till it's actually in there in the fund to spend that money. You can't spend the fund into a negative balance. And lastly, the Fund 8895, the Title 4D Incentive Fund. The prosecutor has their incentive fund, 8897. The clerk has their incentive fund, 8899. They can spend from those funds. They sort of had dominion over those funds. But this 8895 fund is a fund that any of the 4D offices can spend from. Now, only the 4D offices can spend from them, but the clerk, the prosecutor, and if there's a 4D court, they can spend from that 8895 fund. So the fact that multiple people can spend from that fund, we strongly recommend, and in fact, we just sent out a guidance document earlier this week, partly on this very issue. Since multiple people can spend out of this fund, it's very important, and we strongly recommend that you have some sort of agreement with the parties involved about how this money is going to be spent to avoid misunderstandings and money being spent that somebody else was counting on. Please have some sort of agreement or understanding about how this money is going to be spent. Get the clerk, the prosecutor, if there's a 4D court, get the judge and the county auditor in a room and say, you know what, we want to give this money all to the court, or we want to split it a third, or whatever you want to do. That doesn't really matter. However you want to split it is fine. Just have an agreement so everybody's on the same page. That avoids a lot of problems, and unfortunately, we've seen that too many times. So those are incentive funds. The final revenue stream deals with the private collection agency funds, and this is solely for the county prosecutors, and it deals with situations where there is unpaid child support amounts for over 2 years. So there's a child support order, amounts that are supposed to be paid, and for over 2 years they have not been paid. At that point, the prosecutors can contract with certain approved collection agencies to go out and try to collect this money. And there are a lot of counties that are enrolled in this PCA or private collection agency system and service, and it does generate quite a bit of money back to the counties. Now, when the money is recovered, it's broken down as you see here on the slide. 75% of it stays here with CSB, and all of that ends up actually going to the custodial parent and to the child. But then 15% stays is for the collection agency, and 10% stays for the county for them to actually spend. So what are the uses of these PCA funds? Well, the county receives both the county portion and the collection agency portion, and they are receipted into Fund 8099. And again, we'll have a remittance notice, and we'll show you how that works. But these amounts are receipted into the PCA fund, Fund 8099. And at some point, the collection agency will send the county a bill for their services. And so that 15% is already in there for you to pay that amount. But then the rest of it, that remaining 10%, is the county's to spend. And it can be, and it's kind of a hybrid type of revenue. It's sort of like incentive funds in some way, and it's sort of like county general funds in other ways. It's like incentive funds in that it can only be used for 4D related expenses or the 4D portion of an expense. So if you've got something that you want to buy for Title 4D, you can use incentive funds if you want. You can pay it out of county general and claim a reimbursement for that part, or you can use PCA funds to pay for that portion of that expense. So they're like incentive funds in that they're only for the 4D portion, but they're like county general funds in that they're reimbursable. So if you do pay something out of the PCA funds, then you can report it on that monthly expense claim form, that first revenue stream. There's a box in that form on our 4D expenditure portal, and you can input, $100 of this amount is from the PCA fund. And then that will show up on the remittance notice that we'll get to here in a minute, and you'll be able to know then that the auditor will know, hey, that money goes into a certain place. So they're reimbursable, and they do require appropriation. So they're like incentive funds that they're only for 4D, but they do require appropriation like county general funds do. All right. Now, those are the 4 revenue streams that you will see. And like I said, we'll get to the remittance notices here in a little bit. But I did want to now go over a couple of the forms that auditors need to fill out related to Title 4D and related to child support enforcement. And the first is the quarterly incentive balance report. Again, it's completed by the county auditor's office, and it's quarterly, obviously in the name. And this is where you report the balances of all of the 3 county incentive funds each quarter. And it's completed in our 4D expenditure portal. It's due by the 15th day of the month following the end of the quarter. So the first quarter ends at March 31st, so it's due April 15th, July 15th, October 15th, and then at the end of the year, it's due on January 15th. And in addition to inputting the balances of the 3 incentive funds each quarter, you also are required to upload incentive ledgers to the CSB. So when you're in the portal, there's a little button that'll say upload documentation, and you just click that and you upload the expenditure ledger that shows the transactions for the quarter in each of the incentive funds, and then budget forms that show the actual balance that you use to input in there. We need that for our documentation to support the numbers that you have input on the form. So here is a screenshot of the 4D expenditure portal and the QIB form. And you can see it says in the middle there, final regular incentive account balance at the end of the quarter. Prosecutor's office, clerk's office, and Title 4D incentive fund. So that's all there is to it, really. You just, at the end of the quarter, you go into your financial system, you look at what the cash balance in those funds is at the end of each quarter, and you just put those numbers in. And that's really all there is to the form. There is a comment box there that if there's any interesting issues or whatever that came up, but it's just a matter of inputting the balances on the form. Now, there is a second row of boxes there, and it says, if applicable, balance adjustments during the quarter. Well, what are these balance adjustments? Well, my group, one of the duties of my FQA group is that we do quarterly incentive reconciliations. We look at the beginning balance, we look at the of the incentive funds, we look at the ending balance of the incentive funds, and we get that from your QIB submissions each quarter. And then we know what the revenue coming in is because that's coming from us. We know what the expenditures going out are because you guys submit us those expenditure ledgers each quarter. And so we should tie out. We have the beginning balance, we have the revenue coming in, we got the ledgers so we know the expenditures going out. It should tie at the end. But if it doesn't sometimes, it's because of these adjustments, these balance adjustments. And the main ones that we see are corrections of errors. So if we have determined, we've looked at expenditures from a clerk's office, let's say, and they have overspent incentive funds. They should have spent, 10% of the cost, but they end up buying the whole thing from incentive funds. So now they're going to have to pay some of that back to restore the incentive fund balance. Well, that is an adjustment made by the auditor's office, and we aren't going to know that. That's not going to otherwise be in the 4D expenditure portal. It's not going to be in the ledgers. It's not going to be in our distributions that go in. So that needs to show up back here on that balance adjustment line. And so, like, for instance, if money is going back into the clerk's fund, then in the middle column there, the clerk, there's going to be a positive balance adjustment for that quarter of whatever the dollar amount is. And that then shows up in our reconciliation, and then when we do our reconciliation, everything will balance. Balance transfers, you can transfer incentive funds from a clerk's fund to a prosecutor and a prosecutor back to a clerk. And we allow that for a couple reasons. One, just for ease of accounting. It's better that the prosecutors just spend from their fund and the clerks just spend from their fund instead of everybody kind of having their hands in everyone else's fund. And another reason is to try to facilitate the spending of these incentive funds. There's $40 million, give or take, sitting in county funds across the state. That's not enhancing the program. That's not getting money to the kids. And so we're trying to facilitate the spending of these incentive funds. And so let's say a prosecutor's office has a project. Maybe they've got an employment program that's going to help the custodial or the non-custodial parents get a job so that they're more likely to pay child support. And that requires some incentive funds, but they don't have enough. And then the clerk's office is sitting on a balance there that they're not using. Now in this scenario, the clerk's office can transfer those over to the prosecutor's office. We're getting incentive funding spent. We're getting a good program for the child support office, and that's a really good reason for these balance transfers. So there's a form to be filled out for this, and if there's a balance transfer, then when you go back to this screenshot again, there would be a negative balance because money's coming out of the clerk's office, and a positive balance adjustment on the prosecutor's office because money's going into there. Again, showing that on this form will allow that then our reconciliations to balance and everything to work, and that way that solves our issues with making sure that we have accounted for all of the transactions. And the last example of balance adjustment that we see the most is interest income. There are some counties that put their incentive funds, their Title 40 incentive funds, in a separate account, a separate bank account, and it earns interest, and then they receipt that interest back into the incentive fund. So if they do that, then that's money going into the incentive fund that, again, is otherwise not reported in the 40 expenditure portal. That's not anything that we would otherwise know. So that's a positive balance adjustment on the portal, and then that helps our reconciliations work. Now, it's obvious that as a result of this, the county auditor's office is going to need access to the 40 expenditure portal. And ideally, we prefer that at least one of the people who has access is the elected official. Now, you don't have to necessarily, you can designate other people to do the work. You can designate somebody to do the QIB for you every quarter, but we do suggest or strongly recommend that the elected official be at least one of the people that has access to the portal that can do the QIB. So if you need access to the portal and you don't currently have access, please email us at this address on the screen, CSB AC request, and we can start that process. It usually takes between 2 days to a week or so to get you access to the portal. All right, the second form that auditors have to fill out as it relates to child support is what's called the Auditor's Health Insurance Form, or the AHI. Now, this is an annual form. The QIB was obviously a quarterly form. This is an annual form, and it's due January 31st of every year. Now, we're working on these right now as we speak, trying to get them approved and get them out the door as of the end of the year. The reason we do this is because this helps the 4D offices determine how much they can claim for reimbursement when the county is self-insured for health insurance. Now, when they're fully insured for health insurance, that means the county has gone out, they bought an insurance policy from, Anthem or whoever, and it's just like kind of normal insurance is. They get a rate sheet from the insurance company. It says how much the county pays and how much the employee pays if they're single, if they're family, if they're employee spouse or whatever. That the county portion is what's eligible for reimbursement. Very simple to figure out what the reimbursable amount is. Unfortunately, that's not the case when you're self-insured. And I'm not going to go into it. There's a whole hour-long video that the clerks and the prosecutors can look at to figure out how to determine this amount. But we have a form that helps that the auditors fill out that helps us determine an amount for these offices to claim for reimbursement. And it's a pretty short form. It requests the budgeted amount for health insurance. Like, for instance, they're completing it this year. So they're putting it right in there. They're putting the budgeted amount for health insurance per person for 2021. So that way, when that form is done, the offices will know, for self-insured counties, how much to claim for reimbursement. The number's right there on the form. It also includes the actual amount expense from the previous year, so that they can use that as a reconciliation, because unfortunately, they can claim the budget amount during the course of a year, but under Title 4D, you actually aren't allowed to claim budgeted amounts. You have to, at some point, reconcile to the actual. So this form will give them the budgeted amount to claim for the year, and then at the end of 2021, when you complete this form again, it'll show the actual amount for 2021, and then those 40 offices can do a reconciliation if they need to, reconciling from the budgeted amount that they claim throughout the course of the year to the actual amount that they know at the end of the year. And it's very hard to know what the actual amount is during the course of the year, which is what's led to a lot of the problems, which is why we've kind of gone this route. A lot of counties were having huge adjustments, negative adjustments, because they were claiming way too much because they just didn't know what to claim. So this way, we wait to the end of the year, we know what the actual expenses are, and then they can do a reconciliation. And so far, the last couple of years, it's worked out pretty well. The adjustments that the counties have been very small relative to what they were in previous years. So for the auditor's purposes, this form is 3 or 4 lines that they fill out. They get the total amount budgeted countywide for health insurance. They put that number in, and at the end of the year, it's the total amount of the actual expenses for the year, and by the end of the year, usually that number is known. All right, this is a screenshot of our page on the Child Support Resource website. Child Support Resource, or the CSR, is a Child Support Bureau website that has all sorts of training, all sorts of informational documents, weekly newsletters, all sorts of information is on here. And it's mainly geared, obviously, towards the clerks and the prosecutors and the 4D courts. But there's information. The auditors have access to this page, and there's information on here that's useful as well. If you look in the upper left, there's categories there. There's claims guides and guidance documents that help you, or help really the 4D offices figure out how to claim expenses for difficult types of situations like conferences. How do you claim conference expenses? How do you figure out what the 4D portion is? How do you claim construction expenses? What do you do about bonuses? How does that work? There's also about halfway down the categories, it says 4D expenditure portal guidance. There's guidance in there for the QIB and for the auditor's health insurance form. So if you're not sure how to get in the portal and complete those forms, there's a step-by-step guidance with screenshots and everything that shows you how to do that work. towards the bottom on the left, there's various incentive-related documents. There's an incentive funds transfer agreement there. There's documents that show how the incentive balances are distributed each quarter. So there's a lot of information. If you see the big arrow there in the middle pointing to the left, there's a Auditor's Health Insurance and a QIB webinar video there that might be useful to auditors as well if you have questions down the road. I mean, obviously you can contact us anytime, but if you have questions down the road, that video is very helpful. It's about an hour-long webinar that we held, and there's a PowerPoint with it, so you know kind of where to scroll through if you want to look at certain different issues. But it goes into detail and answers a lot of questions about the Auditor's Health Insurance Form and the QIB. All right, on to the remittance notices. Hopefully this is something you can see here. All right. As I said, there's various payment processes. For the monthly expense claims, the 4D offices submit their information to us through the portal. It goes from us through a payment process and eventually is receipted back to the county from the Auditor of State. Now, when the Auditor of State submits that back to you, generally they send you a somewhat cryptic message saying, hey, there's money coming from Child Support Bureau, but they don't tell you really what that money is. And so, or necessarily specifically where it goes. And so we have come up with our remittance notices here that we email out to everybody at least one day or maybe 2 days before we know that electronic transfer is coming back to the county, and it tells you, hey, here's what this amount is and here's where it goes. So, for example, this first one is a remittance notice for the monthly expense claim. And if you see the first arrow at the top pointing to the left, it says regular FFP reimbursement. That FFP stands for Federal Financial Participation. That's just that's the official title of it, but we just call it the monthly reimbursement, monthly expenditure claim. So this is the amount that the clerk, prosecutor, and court are incurring monthly doing their normal work, and they're claiming reimbursement for it. The second arrow to the right, a little bit, it's pointing down, says general fund. That's where the default is for these monthly expense claims. If there's no information further down, and we'll get into that in a second, if there's no information further down, the default is these reimbursements go into county general as miscellaneous revenue. But as you'll see on that fatter arrow pointing to the left, there's a couple of the line items, the clerk expenditures and the prosecutor's expenditures, that have some asterisks beside them. And those asterisks are referred down to the bottom, and you can see that the two asterisks for the clerk shows that $2.13 of that $15,000 reimbursement goes back into clerk perpetuation. So it's the responsibility of the clerk or the prosecutor or their vendor when they complete the MEC. If some of those reimbursements come from different funds, they have a remittance notice box on the MEC where they put that information. Not for the auditor to know that. You can't know that. And so if there's no notices down there, this money all goes into county general. But if there's indications down there about where some of this additional revenue goes, then that helps you know where to put some of the additional revenue. Same thing for the prosecutor. The three star. It says the deposit of that $131,558 should be deposited as follows: $10,000 into county general, and the remaining $121,000 goes into infraction deferral. So they had a huge amount. A lot of their 4D expenses for the Allen County prosecutor doesn't come out of county general. It comes out of infraction deferral. And so you know then where those funds go when you get that deposit. So that's your standard monthly expense claim reimbursement, remittance notice. Of course, it's always a little more complicated than that. CSB, Child Support Bureau, and the prosecutors have a separate agreement. The prosecutor's offices really are not statutorily required to deal with child support, but they do mainly because they're really the only ones that can effectively, but also there's been an incentive agreement between their lobbying and training group, IPAC, and CSB for a number of years that the first certain dollar amount of the reimbursements that the prosecutors get is all reimbursed at 100%, not the 66% normal, but 100%. So the federal government does their normal 66%, and CSB, as the state, kicks in the other 34%. So as you can see on this remittance notice, it says MEC at the top, prosecutor 100%. Again, this is really exactly the same as the regular MEC reimbursements, but it just is showing for the prosecutor's office 100% of this, or 100% of this amount is reimbursed to the prosecutor. Now, at some point, they will work through that 100% money, and for the rest of the year, their reimbursements are 66%. But this is just a little bit of a different remittance notice. The language is a little bit different. You see the top arrow, it says 100% allocation money. It doesn't have the FFP on there, but it is the same thing. It is still reimbursable money. The big arrow pointing down says county general fund. And again, these funds could be split. In this case, there is no split, so this money all goes into county general. But I just wanted to show you it's a different version of the regular MEC one. It's the same thing. It's just that prosecutors, as an incentive to get them to hear it and continue to deal with child support cases, they get 100% reimbursement for a while, and then the rest is 66%. All right, the next remittance notice deals with cost allocation plans. And you can see the top, that's those indirect plans with those indirect expenses that are still county money and still reimbursable. You see the top arrow up there, it says 2020 indirect cost reimbursement. Therefore, you know it's indirect cost reimbursement. And like I said before, indirect cost reimbursements all go into county general regardless of how they're generated in the plan or where they come from. It all goes into county general. So you can see that the second arrow on the right pointing to county fund, 1,000 county general, all that money goes in. These are quarterly reimbursements. It says indirect cost reimbursement third quarter. There'll be one for each quarter for each county. Now we go to the Title 4D incentive fund remittance notice. Again, the information that you need is all on there. The top arrow pointing to the right says federal fiscal year 2019 prospective incentive. Now the federal fiscal year is always a little bit behind. The remittance notices that you'll be getting in 2021 will say FFY 2020. The federal fiscal year is different, obviously, than the calendar year. So don't worry so much about that, as is the prospective incentive amount. That tells you it's an incentive fund. It's not indirect reimbursement. It's not FFP. It's incentive fund. The arrow middle right points to incentive, and then the big fat arrow pointing down tells you, hey, this is the prosecutor incentive fund, 8897, the clerk incentive fund, 8899, or the Title 4D incentive fund, 8895, and then the corresponding amounts there on the right. So it's clear on there, this is where this money's coming from, and this is where it goes. And then I believe the last remittance notice is for the private collection agency funds. And again, the top arrow there clearly designates this is for PCA fee payment. It's not anything else. Clearly designates PCA fee payment. The second arrow points to Fund 8099, so that where it goes is clearly indicated. And then the amount, remember, both those amounts do go into 8099, and eventually the collection agency will be asking for their share, I'm sure. But this tells you where that electronic payment to the county tells you where it goes. Well, that ends my presentation. If you have any questions, I'll be glad to answer those the best I can. This is my contact information. Lisa Smith is my chief deputy. That's her email address. And then the bottom one is just a kind of a general mailbox for the Financial Quality Assurance Group. I'm glad to take any questions you have.
Okay, I am going to give you back control of your cameras and your microphones. If you have any questions or you just want to say hi and introduce yourself, please do so. It's all crystal clear. Anybody?
Well, if you don't want to ask now, you can always ask later.
Absolutely. You can also type in the chat box if you would rather do it that way versus say it out loud. I think I talk faster than I type. That's why I would rather talk than type something to somebody. But I'm not seeing anything from my end. But again, if you guys have any questions, there's his contact information. You could reach out to Lori and I. We'll get you there if if it's something that he can answer. We all try to work together and make this as successful as possible, right?
Correct.
Well, we really appreciate you guys coming and tuning in. We really appreciate John coming and talking over all of this. We know this is a lot, especially when you're new, taking in the different parts of the 4D and knowing where it all goes. So we do appreciate all of that. And I guess if there are no questions, we will release you guys for this morning. And I think that ends this week. So we'll see you maybe next week. I can't remember. So check your February schedule of sessions and join us next month as we will tackle a couple more topics before we release you guys from the newly elected trainings. So thank you again. Thank you again, John.
Welcome.
Have a wonderful day.
All right. Thank you.
Hi, everyone.